Mm, mm, mm. The Dow is red, the S&P is red, Nasdaq is red, and everyone's favorite Tesla was down by 34%, Apple down by 16%, Microsoft down by 13%, and Facebook down by 10% since last Wednesday, and the list goes on. Wow, what a week it has been! Are we heading into a bear market? How deep will the market dive? While some believe that the market is merely correcting itself, as it had been enjoying quite a good ride over the past few months, I believe we should always practice good investing habit no matter the market. Today, I'm going to talk about how you can mitigate your losses if the bear does indeed comes to the town. I'm going to show you 3 tips that you can use to maneuver through the deep Red Sea while still participating or even potentially profiting from the bear market. Hi guys, I'm Ethan and welcome to my investing channel. So the markets have been in the red since last Wednesday, which I'm sure many of you have suffered some or even huge losses. This is a good reminder that the market is not always a straight line. Expansion will naturally comes with consolidation. Being a retail investors, we need to be much more prudent in our selection of shares, as we are practically at the bottom of the food chain. US markets are made up of 25% retail investors and 75% institutional investors who are much more equipped than the retail investors. And share prices are made up of demand and supply. You can imagine how easily a small-time investor like yourself ended up at the short end of the stick. Nonetheless, today I'm going to share with you 3 tips that will get you through the bear market. Number 1. Review what your stock holding is. Get rid of stocks which are not generating real profits. Also get rid of stocks which are hyped up without strong fundamentals and backing from institutional investors. Like some unknown stocks that appear out of nowhere and everybody started promoting it over the last few weeks. These stocks are likely to have gains by a tremendous amount now. These are the stocks which will be the first to be abandoned by both institutional and retail investors. Because these stocks are highly risky and during bad times, they may not have enough cash to survive the economic downturn. If you somehow caught in a losing penny stock, be bold to cut losses, as bear market will only make the situation worse. Number 2. Make sure your portfolio is diversified enough to various industries or even other investments besides stocks. When the market crashes, it is usually due to economy is not doing well, and the investors are worried that the companies may not be able to deliver the kind of performance that they used to deliver. However, there are some industries that will perform despite economy downturn, such as the beer stocks, KNBWY, ABEV, and CCU. And usually beer stocks pays average dividend, so you may consider to hold some for the time being. There are also other investments which do well during bad times, such as gold, Japanese yen, or maybe even Bitcoin. My point is, during bad times, there will be more stocks going down, right? Which means chances of you getting wrong is higher. And if you spread your basket across sectors and other investments, you are likely to lose lesser. Nasdaq has been carried by the tech stocks for the past few months. Many conventional stocks such as airlines, REITs, banks, etc. are not doing well for obvious reasons. So, I would say it may not be wise to be holding too much weightage on tech stocks. If you insist on holding tech stocks, I would recommend Facebook, Amazon, and Google, as these companies have enough cash to carry them through a difficult period and they have proven their worth over the last few years. Amazon is also an amazing addition to your portfolio if you haven't had any Amazon shares in your portfolio. Amazon has never declined for more than 9% in 2020. Amazon has benefited from everyone who started working from home due to the pandemic, as we have all seen an uptick in online purchases. Amazon holds close to 40% of market share in the US e-commerce space. Hence, I think Amazon will be the most resilient stock among the three that I have just recommended. Lastly, if you have already lost a lot of money as the market caught you by surprise, do not sell off your shares too quickly. Review again the stocks on a few essential ratios during downturn, and that is the debt-equity ratio, as well as the cash balance. Low debt-equity ratio means the company may be able to borrow more to keep themselves afloat, and cash balances is self-explanatory. Also, check their revenue growth. If it's still strong, if yes, then you may have already reached the bottom of the ocean. It is time to average down your position when there is a sign of recovery in the market. During bear market, you need to let go of your emotions and remain calm and study your stocks much more wisely. I hope my tips are able to help you to stay on course. If the bear indeed coming, please know that you already have your strategy on what you need to do next. That concludes my video today, and if you like the video or you find the video helpful, please give me a sub, like and comment. Thank you, 谢谢, 감사합니다, arigatou gozaimasu, salamat, doje. Till my next video. Bye bye.